This video is for educational purposes only and is not trading or investment advice of any kind. Trading is risky and you could lose more than your initial investment. Past performance does not guarantee future results. Hey there, in this video I'm going to show you what is divergence in Forex trading. So if you're wondering what divergence is and how it's traded and how you can test this out to see if it would be a strategy that would work for you, then check out this video. Alright, so what is divergence? Divergence is just a principle that says there's an indicator and then there's price action, as you can see here on the screen. And you're going to look for something where, or a situation where price goes one way and then your indicator goes the other way, and that can give you a clue that price is going to also move in that direction. So what do I mean? For example, this is the Euro US dollar daily chart. If we connect the tops of the price action here, you can see that it's still on the uptick. But then if we look at these other indicators like RSI, for example, and MACD, there's plenty of other ones, CCI. It just depends on what you're comfortable with and what you want to use. And if you're going to use one, just stick to one and don't try to put as many on the screen as possible, or don't hop around between them. Just use one, get familiar with it, and see how it works. So for example, on the RSI, if you look at these same peaks on the RSI, it's going down, right? So it's possibly signaling that price is going to head down also. And as we can see in this well-chosen example, that price came down, you had a nice little pin bar clue up here, and then price started to move down. Same thing here with the MACD. If you look at the MACD lines, either the histogram or the line, you connect these tops here, and then there's a downtrend there. So in both of these cases, that's divergence. Okay, so now the real question that you have about this is, how do you make $1 million with divergence, right? Okay, so keep in mind that this is only a very, very small part of trading, and you're not going to get rich just by trading this one pattern blindly. And in the real world, this isn't going to work every single time. So you need to, number one, get educated, learn from somebody who trades this strategy, and see what they do, see how they manage their risk, see what other things they look for. Just not just the divergence, but they may look for other price action patterns. They may look for certain types of market conditions, certain trends on the higher time frames, things like that. And those will give you clues to improve your accuracy. Number two, back test it as much as possible. Just keep back testing it, see how it works, check out your stats, look at your win rate, look at your expectancy, those type of numbers. See if you can run it through a Monte Carlo simulator, stuff like that, just to kind of test the rigorousness of it. And then, if it passes those two tests, the education seems to work well for you, the back testing seems to work well for you, then you put it into a demo account, trade that for a little bit, see if it lives up to your expectations in terms of the back testing. And then if it passes that test and you're able to make money consistently with that, then put it into live trade. I guess the biggest warning here is that a lot of people, they see a YouTube video like this, they want to immediately trade the strategy live, but then number one, they won't have any confidence in it because it didn't come from a source that they trust, right? Number two, they didn't backtest it, so they didn't see the results, they didn't see the possible drawdowns, they didn't see the win rate, etc., etc. So don't just trade any pattern blindly. You need to figure out the nuances of it, because there will be times when it doesn't work, and you need to know how to spot when it's not working and when it is. So I hope that helped, and thanks for watching.